This is the old guy coming to you live. And I'm actually going to do a lesson today addressing one of the questions that Scott had last week, one that's probably overdue, and that is, what is the definition of a real estate dealer? And I'm going to answer that for you right now, so forever you'll know the answer. Now, I got to tell you, back in 1982, that's one of the first questions that I wanted the answer to. I came right out of the class and somebody mentioned the word dealer and scared the crap out of me, so I went and paid $1,000 for an attorney to give me this same answer, that I'm actually a lot smaller answer than I'm about to give you. Now see, back then they didn't have the internet, because they could have looked it up on the internet in about 30 seconds. So could you, but I'm going to go ahead and do it for you. Then you can go look it up anyway to check to see if what I'm telling you is true. So here we go. First of all, what is a dealer? Well, the answer is, and when I'm talking about a real estate dealer now, I'm not talking about a poker dealer or a drug dealer, a real estate dealer. The answer is, and here's the IRS definition, anybody who buys with the intent to resell. That's a dealer. That's broad-based, I get it, as most laws are, subject to interpretation. However, there have been some guidelines come down that kind of clarifies a little bit what a dealer is. We all buy with the intent to resell, but basically, if it looks like that is our business, then we are going to be considered a dealer from the IRS standpoint. Now, before I go any further, let me just tell you that A, the IRS has to audit you and call you a dealer before you're a dealer. So try not to worry about things that are likely never going to happen anyway, but you should know what a dealer is, and you should not become a dealer. And here's why. There are several reasons why you should not be labeled as a dealer individually. Reason number one, dealers do not get long-term capital gains. So even if you hold on to your property for more than a year and sell it, a dealer is going to pay the top maximum capital gains price there is. Right now, that's about 39% or so. So if I get short-term capital gains, I'm at 20% maximum tax. And if I have long-term capital gains, long-term is about 20%, short-term is about 39% or so. And that's on top of state tax, if you have a state income tax as well. So you don't want to become a dealer, because if you do, you get no tax advantages whatsoever as a dealer. Secondly, I can't exchange properties as a dealer and get tax-free exchanges. I can as an investor or as an individual. And you know, that's big. That's the difference between giving the government a lot of my money or not giving them my money. Thirdly, I don't get depreciation as a dealer. I do as an investor, but I don't as a dealer. So I don't get to depreciate the value of these properties for all the years that I hold them. Thus, I'm paying more taxes. But here's the big one. As a dealer, I do not get installment sales. So if I'm selling a property on a land contract or a wraparound mortgage or an all-inclusive trust deed, or however I'm selling it with owner financing, I don't get the benefit of spreading out my taxes over a period of several years. So let me see if I can relate this to simple math for you. Let's say I buy a property for $100,000 and I sell it for $150,000. My capital gain is 33 1/3%. I made 50 grand, which is 1/3 of the total sales price, 33 1/3%. If I sell it in year one, I'm going to pay taxes based on that $50,000 gain. So I'm going to pay 35 to 40% of that $50,000 to Uncle Sam right then and there, which is to be expected. But now let's say I take that same property that I bought for 100 and I sell it for 150 on some kind of contract with $10,000 down, and then I'm financing the balance over a number of years. In an installment sale, I get taxed on the portion of that principal that I receive every month that is profit. So let me break that down to you. Let's say I'm receiving a $1,000 a month payment, and $50 of it is principal, because that'd be about right. Pay very little principal, or they pay very little principal every single month with their payment. And the rest of it is interest. Well, as an installment sale, I get taxed on 33 1/3% of that $50 every month that it comes in, and that's it. So my taxes are spread out over long term on installment sale. Now I got to pay taxes on the interest I receive, but I also get to deduct the interest that I pay out, which is generally a wash. So I'm only getting taxed on the percentage of profit of each part of my principal payment that I receive every month. That's big. So in other words, I can make this sale, even though I've gained a third of the total sales price, I'm paying taxes over the next few years. However, along comes dealer. If I'm a dealer, and I'm classified as a dealer, and I make that same sale, and I sell that property for $150, I got to pay taxes on that $50 in the year of the sale, regardless of whether I received the money or not. So how would you like to owe $20,000 worth of taxes, and you've only collected a $10,000 down payment? Well, that's exactly what will happen to you if you get called a dealer and think you're an investor. You'll pay all the taxes up front now and money you haven't even received yet. That's not a good thing, incidentally, in case you haven't figured that out already. So we don't want to be a dealer for no other reason installment sales. And lastly, a dealer gets taxed on their net operating income. If I'm in an LLC as an investor, that would just flow right through to my personal tax returns. A dealer, whatever my NOI is that year, I'm going to pay income tax as if I'm self-employed, because I am, regardless of what entity I hold those properties in. So I'm going to pay needless self-employment tax as a dealer. Now, all of these reasons right here combined means a dealer for you is a no-no. So I know your next question is, well, how do I avoid being a dealer, Ron? The answer is the following. If you are buying properties with the intent to resell them, as all flipper entities do, then you are a dealer. Now, you're not a dealer. That's the key. The flipper entity is the dealer. If this entity here is wholesaling houses, if it's buying them and rehabbing them and then selling them for cash, or if it's even doing the axe deals, I'm getting in and I'm getting out, those are all dealer activities. I am clearly buying with the intent to resell. I don't have a defense if I were to get audited. Remember, I got to get audited by the IRS before I'm ever going to be a dealer, and they got to have a reason to audit me. So it makes the case for you having a good CPA to begin with. My flipper entity is a dealer. Acts like a dealer, smells like a dealer, it is a dealer. So it will not get any of these things right here. Now, since I'm buying it and selling in the same year, I don't care anyway, unless I'm selling it on installment sales, because I'm not going to have any long-term capital gains. I'm not going to do any exchanging. I don't care about depreciation. I'm not going to hold it long enough. And I'm going to get taxed on the NOI anyway in this entity, most likely, because, well, if it's an LLC, if this entity is an LLC, and it's called a dealer, I'm going to have to pay taxes on the gain. But if it's not called a dealer, I'll pay taxes over here because the income's going to come down to me personally through that entity anyway. So either way, you're going to wind up paying taxes. But in self-employment taxes, you got to pay the income, personal income on self-employment taxes. But you also got to pay Social Security and match the Social Security. So you got about 15% going out there in just Social Security and FICA and FUTA if your entity is a dealer. All right, over here is the keeper side. The keeper side is where I want all of my properties that I intend to put tenants in. Basically, keeper equals tenant, if you can make a note of that. In fact, we ought to probably put that right there. Keeper equals tenant. If I'm going to put a tenant in a property, it means I'm going to put them in there likely for a longer term, meaning over a year. If I'm going to do that, they should go over here. And now I look like an investor. If I act like an investor by not selling it immediately, I smell like an investor because I'm advertising for tenants, then I'm an investor. I'm holding on for long term. And I've separated myself from the entity that's obviously a flipper. So if I've got long term, it's a keeper. A keeper is not going to be a dealer. Now there's some other guidelines that come along with this thing. There's some other things to take in consideration. But honestly, if I'm over here and I'm keeping these properties and it's obvious that I'm trying to sell them, but then I take tenants instead, then the IRS will come in and make a case, well, you're actually a dealer. But the truth is, if I got a bunch of these, and in fact, I'm going to tell you right now how to not worry about this. Here are the things that I suggest you do. Number one, you got to set these entities up and make sure you keep flipper money over here and you keep keeper money over here, and never these two shall meet. But if you got income from any other source, if you got a job, they're not going to call you a dealer. If you got another profession, they're not going to call you a dealer, unless that profession happens to be a real estate broker. If you're a real estate broker, the evidence is against you, so you're guilty until proven innocent. So you better have a good track record of having some investment properties over here to offset. If you're a land developer, you're a dealer. You're not, but the entity that you're developing in. If you buy land and cut it into lots and sell those lots, that's a dealer activity. You clearly bought with the intent to resell. However, if you buy a subdivision that is already subdivided, that's an investor activity, or could be. You bought with your intent may not have been to buy with sell. So if I have a preponderance of evidence that this is what I do the most and this is what I do the least, the IRS could come in and say, hey, this guy's a dealer. That still doesn't mean that this guy's a dealer. So it's really up to the IRS interpretation. The only thing you can do is go run your business and get as many income streams as you can coming in. Do everything you can to make this look like it's an investment portfolio. Have this flipper over here so that if you ever get attacked, you can always go to the IRS and say, hey, this was set up as a dealer, this wasn't. And then, of course, it's entirely up to your attorney or their attorney to figure out how to defend you best. But honestly, your chances of getting called a dealer are extremely slim. I've been at this for 32 years, and so far I've only met 2 people in that entire time that were ever called a dealer, and both of them were absolute dealers, no question. They knew it before they even got attacked because they went out and do a ton of these all year, and this is pretty much all they do. If all you do is wholesale and flip properties, whatever entity you do it in, it's a dealer. Case closed. If all you do is axe over here, it's a dealer. So again, I have one of these. It's a dealer. I'm not going to say it's not a dealer. But you don't want to do is have your CPA ever name this a dealer or this a dealer. You're in the real estate investing business here until the IRS says different. You're in the real estate investing here forever. And as far as your individual name goes, if your accountant ever calls you personally a dealer, not only does that accountant need to be fired, but there probably ought to be some kind of action taken to remove him or her from the face of the earth, because that is the wrong designation. Don't ever let your CPA call you a dealer, because it's kind of like getting the plague. It's going to be hard to get rid of. Once you're called a dealer, it's a real job to prove to the IRS that you're no longer a dealer. So I don't know whether I created more questions than answers. By the way, LT does not mean lieutenant, it means land trust. So even my flipper entities take title individually in individual land trusts, and then my flipper entity owns those. Same with my keeper entity. I buy them in a land trust, keeper entity owns all of them, but all the money from all these properties goes in and out of this account. All the money from these properties goes in and out of this account. Make sure you keep these two separate. So I hope that helps. I hope now you truly understand what the definition of a real estate dealer is. See you soon.